All right, 9-4. This one's a little shorter. Alpha Communication purchased equipment on January 1st, 2018 for $27,500. Suppose Alpha Communication sold the equipment for $20,000 on December 31st of 2020. Accumulated depreciation as of December 31st of 2020 was $10,000. Journalize the sale of the equipment assuming straight line depreciation was used. Okay. I'm guessing they didn't do depreciation at December 31st of 2020 yet. Okay, so anyway, let's figure it out. So straight line depreciation is going to be $27,500 minus well, it was $5,000 a year, so I'm assuming it's 25. Do y'all know how I know it was $5,000 a year? Accumulated depreciation equals 10,000 currently, and that is for 2018 and 2019. All right, so depreciation per year equals 10,000 divided by 2 years. So it equals 5,000 per year. All right, so 2020 depreciation is 5,000 again. All right, so they had 10,000. Then you add in 2020 for 5. So 15,000 is your accumulated depreciation at 12/31/2020. I'm assuming that's what that means, so that's why I'm doing all that. Okay, we're not doing the book value. We're not doing the journal entries. I just want to know the gain or loss. Gain or loss on sale would be how much? Okay, so remember it's the sale price, which is 20,000 less book value. All right, book value is cost minus accumulated. All right, so my cost was $27,500 minus the 15 of accumulated. So sell price minus accumulated. So this is my gain. And that's all that I will ask you to calculate on the test. We won't be doing the journal entry. Gosh. Now for learning purposes, I'm going to do the journal entries. So I'm going to record depreciation. All right, that's depreciation expense and accumulated depreciation for the 5. I don't know if y'all can hear the wind outside my house, but it's crazy. And then disposal, we got cash of 20,000. Accumulated depreciation has to come off. I calculated right here, that was 15,000. I'm going to skip a line. I have to take off the equipment. That comes off at the 27,500, right? And what I pay for it. And then if we sum it up at this point, if we check it, I've got 35 on that side, and I only have I'm sorry, y'all. I'm kind of losing it. I only have 27.5 right here now. And if you remember, I had this gain of 7,500. Gains are like revenue, so they're a credit, and that makes it balance out. Okay, but remember, on a test, this is what you need to be responsible for. Okay, I'm going to go ahead and do the next one too. All right, this one you're just supposed to tell me if it is a revenue expenditure or a capital expenditure. So we have A, B, C, D, E, F, G, H, I. Okay, so consider the following expenditures. Classify each of the expenditures as a capital expenditure or a revenue expenditure related to machinery. All right, purchase price. That would be a capital expenditure. It would go up on the balance sheet. Expenditure just means that you spent some money, and then you're either going to classify it as an asset, which is a capital expenditure, or you're going to expense it, which is a revenue expenditure. All right, ordinary recurring repairs to keep the machinery in good working order. That is a revenue expenditure. It would be like maintenance expense. See, lubrication before machinery is placed in service. That is probably a capital expenditure because it has to be done before you actually place it into service. It's part of, installation basically. All right, periodic lubrication after machinery is placed in service. That is a revenue expenditure. That's just to keep it going. Major overhaul to extend useful life by 3 years. That is a capital expenditure because it extended the life. F, sales tax paid on purchase price. That's part of the cost, so it is a capital expenditure. G, transportation insurance on machinery is in transit from seller to buyer. That's capital. Why isn't it copying it over or typing it for me? H, installation. That's capital expenditure. Anything to get it going. Training for personnel for initial operation of the machinery. That is also a capital expenditure because it's necessary before it is placed into service. Okay, that's it for those. And then I'm going to do exercise 20, but I'm going to make it its own video.